Hey YouTube, what's going on? It's your boy TriniFX here, back with another trading recap. Alright, this one will be a quick one. Today's Tuesday the 14th. Today we had red folder news. We had CPI at 8:30, and then the chairman Walsh, he testified at 10 o'clock. So coming into the market, we see yesterday's price action traded lower, taking out the relative equal lows on this side. And then Asia, we just rallied down into this bullish 1 hour fair value gap, and we started to displace higher. Midnight New York local time, price continued to rally higher. London was just bouncing between this bullish fair value gap and this bearish fair value gap on a 1 hour time frame. So we could see price just went back and forth, really consolidating in London. So what I was looking for was accumulation, manipulation, and see if we could get the distribution lower. We marked off our higher time frame fair value gaps, dropping into a 15-minute time frame. We could see where we are in terms of the overall dealing range. We are just about before market opened, between the 50% and the 0.25% on the dealing range. So we weren't able to close above the 0.25% to take out yesterday's high and day before previous day's high. So I was looking to see, what price will give us on market open. We see the news sent price higher and then ultimately close below the 0.25%. This was also a bearish fair value gap on the 4 hour time frame. If you look at your charts, you would have seen that. So what I did, I marked out my 15-minute fair value gaps. We also had this 15-minute gap in here. However, if I was to go long, I wanted price to come down below the 50%. Preferably taking out this consolidation here, because this was the original consolidation before the pump higher for news. So I just waited. We see market open, dropping into a 1 minute time frame. Let me just come across here. We could see exactly what transpired. So this was the news, the data candle, the data high, and the data low. So what I was looking for was actually price to go lower, then to go higher, right? However, when market opened, we saw price rally down. Remember, this was a 15-minute bullish fair value gap here. So once I saw the rejection, I marked off my first presented fair value gap. So I'm thinking to myself, price may not want to gravitate into this lower 15-minute fair value gap. So I waited to see this back and forth here. I'm pretty sure it chopped up a lot of traders because it was just back and forth, back and forth, back and forth. So once I saw it finding some support on this first presented, I did take a long. Thank God it was very light risk. I went 0.25%. I normally risk 1%. So this was 0.25%. And as we could see, I got stopped for a loss. So I was monitoring price. If price was to go up to take out the data high, then great. So what I did was I switched my bias in the middle of the morning. You should not do that. You should stick to a bias. If you wanted longs, wait for it to come below the 50% and then take the long. So that costed me as a loss 0.25%. Once price, however, traded below the first presented fair value gap and closed, that gave me a little more conviction to know that price would at least take out the data low. So I got in short and was writing it down. Now you can see where I have my tool here. What happened was I was in profit all this. We were going down. We hit this 1 hour fair value gap and we took out that low here. So I was up 2.64% on the account. However, I was not at my desk. I set the trade and I moved my stops once price started to run down, because ultimately I was looking for price to take out the original consolidation. If we will see price, remember the original consolidation, I was looking for price to get below there. So I moved my stops to break even. Let me just, well, not break even, it was better than break even. It was as price traded below this 1 hour fair value gap on the 1 minute time frame, I moved my stops to a little better than break even. And price did not get down there because I had my limit order right below these relative equal lows here. So price ultimately reversed, stopped me off. However, this trade was not at 0.25% risk. Remember, I risked 1% per trade. So since we had the CPI and Fed chair speaking, my first trade was 0.25%. So I just risked the balance of my 1%. So if both of them was a loss, I would have just lost 1% of my account. So even though this was not a winner, it wasn't a break even, was better than break even, I still managed to recoup the loss. So today was a break even day overall. And we could see price ultimately trading higher. And this is where price is at this point in time. So guys, that was a trade recap for today. It was a choppy price action early morning until about 10 o'clock. Then price began to flow a little better, right? If I did not take this loss, I would have probably taken a long to see if we could have gotten above data highs. It is what it is, guys. Tomorrow we do have PPI at 8:30 and Fed chair testifying again at 10. So let's be mindful. Let's wait for the news to come out and then we could look for our potential trade entries. So that's the recap for today. Like, share, subscribe. Let me know in the comments, if you guys caught any trades, how what your analysis was. I'd love to hear from you. But before we go, let me just show you very quickly the executions. This was the long I took and the loss, and then I got in for better than break even. And while I was getting out, I accidentally took a buy. Um, it worked out, but I had to exit the position there because this was an error. This was the long, this was the short. This buy was an error, but it did play off. So that's the trades for today, guys. Until we talk again, stay safe, and tomorrow we'll talk again. Bye bye.